I didn't learn this until I started investing in real estate myself. But there are 3 reasons why wealthy people start investing in real estate. Number 1 is because you get the cash flow. Number 2 is because you own hard assets. And number 3 is because you get tax breaks. Now, I am a licensed attorney, who's not your attorney, but what I can tell you is that real estate has some of the biggest and best tax breaks that a tax code has to offer, period. What does that mean? So now if you go out and you buy a property, you buy a rental property that you want to rent out to somebody else, you buy an apartment complex, it doesn't matter. You are going to generate income, right? The tenant's going to pay you rent. You're going to pay your expenses out of this property, and then you're going to have some profit in your bank account, assuming you do it correctly. Now, the first thing is you can take some write-offs against this profit. What is a write-off? A write-off is an expense that you need for the business. So let's say you need a cell phone to run your rental property business. Well, that becomes a write-off. You can write that off against your profits. Let's say you need a car or a truck to get to and from your rental properties. That becomes a write-off. Now you can pay off or write off a piece of the value of your truck or your payments. If you have payments on your truck, don't recommend having payments, but if you have payments, you can write those off. You can write off a piece of your gas that you have to pay every 2 weeks on your truck. You can write that off as well. Your maintenance on the truck, those are things that you can write off. Maybe you have to have lunch meetings with brokers or other team members. Those can become write-offs. Maybe you have to go to Hawaii to look at some rental properties. That becomes a write-off. So now the question is, how can you strategically write things off? Because what wealthy people do is not ask the question of, is this a write-off? They ask the question, how can I make something a write-off? That's why you hear wealthy people talk about they don't pay any money in taxes. The reason why is because everything they do revolves around their business. And that means now they're always looking for ways to turn whatever they're doing, whether it's traveling, whether it's eating out, whether it's going on golf trips. They look for ways to turn these into business write-offs. That way they can now lower their tax liability and use the income from their business or their rental properties to pay for a piece of the lifestyle strategically. That way they can pay less money in taxes. Now, as a little piece of advice, if you are investing in rental properties, get a good accountant. That is the best advice that I can give you here, because the reality is if you start doing this the wrong way and you end up on the wrong side of the IRS, they are going to come and they're going to fine you, and they might even put you in jail. That's why you don't want to play around with the IRS. You want a professional here who can help you do this strategically. And another piece of advice when it comes to getting a good accountant, you do not want an accountant who only files your taxes. And I'm telling you this from experience here, because I've had good accountants and I've had bad accountants. The bad accountants that I had cost me less money month over month, right? The monthly fee for the accountant was less, but they ended up costing me way more money overall because I way overpaid in taxes, because these bad accountants, all they did was they looked at the reports from my business and my rental properties, and then they filed my taxes, and that was it. Now I pay way more money for my accounting fees for my good accountant. I mean, many multiples more money, but now I'm meeting with my accountants very regularly. If it's not quarterly, it's monthly. It just depends on how busy my schedule is, but at least quarterly, I'm meeting with my accountants. Why am I meeting with them? For tax planning and tax strategizing meetings. This is where the money is. If you are investing in rental properties, if you have a business, you need to have these types of tax planning and tax strategizing meetings, because this is where now the accountant, if they are an experienced and smart and good accountant, they're keeping up with what the tax code says. The tax code is over 2,000 pages long. I've read a lot of it in law school. The average person has no idea what's in this rule book. I can tell you that because I've tried to read it, and it is so boring and so detailed. But a good tax accountant, not only are they going to read what's going on there, but they're going to be keeping up with the new regulations that are happening, because constantly things are changing in the tax code. And that's where they want to be meeting with you and say, okay, here's how much money you made in the last quarter. Here's what your tax liability would look like. And here are the options of things that you can do based off of how the tax code is changing, or based off of my recommendations of things that you can do to potentially lower your tax liability. There's a lot of different things that can be done on the tax side, but you need a good advisor here. That way they can, number one, guide you and make sure you do not get in trouble, because there's a lot of rules here. The IRS rule book is a rule book, and the way that you win is by understanding the rules, and you don't want to be doing that yourself. You want to make sure you're playing within the guidelines, within the rules, but you need an advisor, a coach, somebody who can sit there and help you do that. So My number one piece of advice there to get the best tax breaks is to get a good tax advisor. The second thing is you own a hard asset. We are living in a time where we are still seeing high inflation, where the Federal Reserve Bank is worried about inflation, where the Federal Reserve Bank is working to raise interest rates to preserve the health of the dollar at a time where the economy is going through a lot of ups and downs. This is where people want to own things like hard assets. A hard asset is something that you can see, feel, and touch. When you invest in real estate, you can see the physical building. You own the bricks, you own the land, you own the windows. You have a physical asset as opposed to something in the stock market where it's a paper asset, where you own a piece of paper which says you own a piece of a company. So when you own real estate, you own something real, something physical, something tangible. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.